Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. Happy Friday. Markets just open a little bit flat today. Kind of after yesterday was a little bit weird in the market. And that's one thing Mike's going to talk about is a concept called sector rotation. You may have noticed all the favorite names, right, went down yesterday. But guess what? A lot of the other names, kind of like the other 493, kind of went up. So Mike's going to talk about that. And and how we prepared for that, because we have been talking about that. That was an expectation. So he'll talk about what we're doing here. Also, Mike's going to talk about, if you saw the headline, kind of an ugly one, an AT&T hack. I don't happen to use AT&T, but I know that probably like half the country does, right? So when you get a hack like that, it's just like, hey, what's going on? Mike will talk about that. He'll also give you a little bit of some tips out there for avoiding hacks in the future. And then finally, I will close with something called a bridge strategy, which there's a couple of pieces to that. You work your whole life, you build this big nest egg, we help you grow that wealth over time so you can live off of it eventually. But there's this, Social Security claiming strategy where instead of claiming at 62, you start taking from retirement accounts. So that way you can do that from 62 to 70, and then you take the full amount from Social Security. So I'll talk about that. Also talk about some early retirement options out there. Before we get started, it's a financial education presentation, so you have to do your own due diligence before acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. The opinions are mine and Mike alone out there. So make sure you are taking that into account before you act upon anything. All right. With that, Mike, let's go to turn it over to you for what's going on in the markets, especially yesterday.
All right. Yeah. Yesterday we started the day off with our show, and it was good news that inflation was down. First month over month reduction in inflation since the pandemic. And so I was, hoping that I would just kick back and see green charts all day and people calling in to say how thankful they were, but what we saw, not that I got any calls on it, but we did see some sector rotation. So I want to show a few 5-day charts just so you can kind of get the perspective of what happened. So what I'm showing here on the screen is the NASDAQ over the last 5 days. So you can see it kind of peaks up right into yesterday morning. And then we get the great news, and then we see a big drop, a big sell-off. And today it's up a tiny bit. And the NASDAQ is heavy tech. So Apple, Amazon, Tesla, all these, NVIDIA, all the stocks that you were like, I hope I'm in that. I hope I'm in that, all the way up. Yesterday, you did not want to be in only those stocks. And if you're in our models, you were not only in those stocks. We are definitely, most of our models are very tech heavy. So you definitely felt the impact. We could see it. But I wanted to show kind of some of our neutral / defensive positions, because coming into this year, the top 7 to 10 stocks accounted for, I want to say, 35 to 37% of the market value, and that's way out of line. That means they're either extremely expensive, in which they might go down, or the rest of the market's going to at least catch up. And so yesterday we saw a little bit of that rotation. So one of our defensive positions we have, or this I call more of a neutral, is JEPI. And you can see this is that 5-day graph. So you can see, look, it actually moved counter to what we saw in the NASDAQ. And a lot of you may have this in your model or in your portfolio, JEPI. And this is kind of like I call it the S&P 500 with guardrails. It doesn't go up as quick or down as quick, but it also puts off a really good yield. You can see it's about a 7.27 yield. So that's really good. But you can see it actually moved up yesterday. Another one is Buffer, same thing. It came down some, but not near the percentage the overall NASDAQ did. And then another position that I'll actually call offensive for this situation that we have in the models is the S&P 500 value. So these are S&P 500 stocks that are already showing a profit. They're not pure growth plays. And you can see also this one went up. So by having a portfolio that has somewhat of a mix, you're not 100% dependent on the NASDAQ going up and down, which of course when it's going up you wish you were, but when it goes down you're glad to have some of this balance. And that's one reason you have a diversified portfolio. So we'll see what happens the rest of today. And I'm not saying that everything this is going to continue this way. We're not getting out of tech stocks. We don't believe that they're going to, just totally crash or anything. But we do want to have that balance. On the other side is I'll show you this report that I saw this morning. Hackers stole records of nearly all cell customers' calls and texts. That means they have my calls and texts. Now, because I have AT&T, and so do all my kids. Now, the good news is it's not like they actually stole the content. It's not like they read, the text where I tell my wife I love her, and they have that content. I don't know. But they just have the record that I sent her a text, or a record I sent my kids a text. What they would do with that, who knows? I don't know. But certainly they could use it to make you more susceptible to being hacked yourself, by either duplicating a number that they see that you've called in the past or things like that. So this is not good news. And while I'm an AT&T customer, it's not just AT&T, anybody's susceptible. These, we do invest heavily in cybersecurity, which is very important. And you can find this article out there, but it was 6 months worth of call and text messages. So, don't like to see that. But what I thought I would share is some tips on how not to get hacked. Let's turn this into as an action item for all of us. The old days of getting emails from Nigeria, from the king of Nigeria, asking you to, hold $1 million for them, and that, it was written in poor English, and you're like, yeah, that's a hack. I'm not that foolish. Those days are gone. Guess what? They can use ChatGPT just like the rest of us. So the scary thing is, letters can be rewritten to be in much better English and things like that. So we are more susceptible to this type of a hack. But here's some tips. Always make sure you use your own bank's website or app. And I'll take an example. Sometimes I get an email from my bank or my credit card, and it's tempting to just click on the link in the email. That could be an imposter, and you could be getting tricked. So, a couple that one, you can hold your cursor over and see the link. That might give it away. Or probably the better way is just open up your browser and go directly to the bank or app or credit card company or whatever. And then you're using the actual site. So beware those emails. Another one is don't reply to a text from your bank. And I've received some of these like, hey, we see a charge for something, click on this if it's invalid. That could be a hack. Either call or go directly to your bank. It does say here a tip: beware aware of ways artificial intelligence can put your information at risk. And phishing messages, that's what the AT&T hack could result in. Just danger. The old giveaways are gone. It's much more different. This next one, I hate to see, but it's the truth. Use different passwords across your banks. And, if you log into whatever website and you use the same password, and let's say it's not a bank, say it's, whatever, some craft company or something, and they get hacked and you use the same password across your banks too, guess what? Those hackers could start trying your email and that password to your bank or credit card. So you should use a different password. And that's a hassle. I totally get you. That's a hassle to have a lot of different passwords. Another hassle, but important, a longer password. So, you can't use the old, Steve is awesome, or I don't even know what password you would use. You got to use the, oh, you still do? Yeah. Oh, don't. You got to use these, uppercase, exclamation point, all that. Very important. And actually, this next one, we're kind of forced to do this, and sometimes it seems like a pain in the butt. But two-factor, multi-factor authentication. It can be a hassle to be like, okay, I want to log into here, and they're going to send me a text message, and I got to put this code in, and it takes a lot longer. But I've started to see this as a good thing. So when we help someone roll over their 401k and into a Schwab account, and they have to make calls to Fidelity, Vanguard, wherever it is, and it takes a week, and they mail checks directly. All of this takes time and work, but I see it as a good thing because it doesn't allow a criminal to steal your money in a day. And so that's all these things are set up to do. So anyways, you can Google, tips to avoid being hacked, and learn more about this. But it's just the way of life that we have now. These are going to be more and more common, and they're going to get smarter too, which is unfortunate. So with that, I'll turn it over to Steve. He'll give us some good news on how to bridge retirement and Social Security.
No, I appreciate that, Mike. This is such good info. We could do this literally every day, talking about different scams that are out there. And my parents are, older, live up in Sun City. And I mean, every time the phone rings, it's somebody's good idea on how to get you to divulge information so they can go in and, take some of your dollars and turn it into their dollars, it seems. It's kind of crazy out there. And, I get annoyed by the password thing too, but, I have to look in the mirror and say, okay, grow up. Right. It's a reality. You do have to manage that. And if you use the same password across everything, you're right. You're asking for it. We use Norton 360 with the companies, which means I use it on my personal stuff too. And it does tell you, it gives you alerts every now and then. It's like, hey, these following passwords are on the dark web, whatever that is. I don't think I have my brain completely around what the dark web is, but conceptually, yeah. Bad web, right? So it'll tell you, and if you're in your passwords are on there, if you see them, then you need to obviously change them, sort of thing. So, all right, let's talk. And you're right, something more fun about, hey, you work your whole life, you work with Ankerstar Wealth to help grow that wealth, and now you want to maximize your life with it. So let's share out an article. This is from Kiplinger's, which again I've subscribed to since back when it was Changing Times. Anybody old enough to remember those days? Yeah, I do. It's one of the things my parents did to help get me interested in this. Was they got a subscription to Changing Times and changed to Kiplinger's. I always read it religiously. Well, they have good articles written at a very readable English level, right, on what you can do. So, but basically, even if you're in your, 30s, 40s, 50s, you kind of think about that. Okay, when am I going to retire? Some of you don't ever want to retire. And hey, as long as you're working, you kind of don't have to worry about this. But if you're considering not working all the way up to 70, which is when you have to start claiming your Social Security anyway, then there are some strategies that are out there. So really, it's kind of, as long as you're working, just work. Don't worry about claiming it. But if you hit age 62, and you have the option, you want to not work anymore, or work part-time, very few people do the cliff retirement anymore, right? So if you get to that point and you don't want to claim yet, because you're going to face reduced benefits in that case, 8% a year, right? Like the tagline here says, you can use your IRAs to take that money and live off of your IRAs until you hit the 70. So let's kind of talk about what that looks like here. I'll kind of hit their, what to consider. Life expectancy, here's the 4 in bold here. Life expectancy, and that's what I tell folks, is, the government's a little bit agnostic as to when you claim, right? Because there's a break-even point. You can calculate it all out, and we've got software that helps show you the difference on this. But if you're a male and you're going to live past age 82, or you're a female and living past 84, those are kind of your break-even points. So, life expectancy, I mean, I don't have a crystal ball for the markets. I certainly don't know, my death date, and many shows out there have modeled this, right? And you wouldn't want to know that anyway. But if, all you can really look at is your family history. So, if everybody in the family is living well in, late 80s, it's like, okay, well, I would definitely wait in that case, because you're playing the odds that you're going to follow your family genes. Now, if nobody makes it far enough to see 80, well, then it's the other way, right? You might want to consider claiming earlier, just because you get something instead of nothing. If you do wait the 8 years from 62 to 70, that's 8 years of $0 that you now have to catch up with your increased benefit from there. Income, like I said, if you're working, continue to work. It's really only a factor if you're continuing to either stop, or at least stop full time, and reduce your income on there. Spouse status is a player, so I will just say that, because that takes hours on itself to explain, the options that your spouse brings into the equation there, and that's really what makes Social Security so confusing. And the last one's investments and expenses. You do have to have investments to live off of, if you're going to use a strategy to live off of them. So that's kind of what the factors it shows out there. highlighted in bold here. Here's where the bridge strategy comes into play. Instead of taking Social Security early, which many tend to do, you can instead take money out of your IRA 401k at the same time your Social Security benefit would be. So we used to get these in the mail, but now you can go to tsp.gov and see what or ask your Ankerstar Wealth financial advisor to help model this for you.
SSA.gov.
Oh, what did I say?
TSP.
TSP. Yeah, that's the
SSA.
other .gov we know. Yep, thank you. SSA.gov to see what your benefit would be at 62 and then your full retirement age, which is specific. That's a little bit of a moving target within there. And then 70, right? You can see what those amounts would be. So basically, instead of taking your Social Security early, say it's, here's the example down here of the bridge strategy, 2572 here for Mrs. Jablowski. You simply take that same amount, or you could up it a little bit so you net the same amount, right? Because you can have taxes withheld. So you figure that out. So you take that amount from 62 to age 70, and then at age 70, you simply turn that back off, and now you switch to the much higher amount. In this case, it's $4,500 a month when you're 70. So, and you can adjust fire in there if you need to in between. So it's basically, instead of starting Social Security early, you live off your IRAs until you have that increased benefit. I think that is far superior in most cases than taking it early and then waiting on your IRAs. So we can get into specifics of your situation, but that's a CFP wrote this article, so the math works, right? So it's something to consider. Now, the last thing I'll kind of end with is, okay, what if I want to retire before age 62? Well, there's a couple of fences. You can use this strategy starting at 59 and a half, right? Because that's the earliest you can withdraw. So at 59 and a half, you could execute this strategy and then claim Social Security at 70. So you're like, okay, well, Steve, what if I'm going to retire somewhere between 50 and 59 and a half? Well, you have a couple of options. There's a 72T election where you can claim out of your IRAs before age 59 and a half. It's a little bit tricky, so we definitely want to walk through you and your situation there to see what that would look like. And you're kind of locking yourself into substantially equal or something equal payments for the rest of your life. So it's a little bit tricky. You may not want to do that. Or you can live out of your Roth IRA because the rules are different there, right? As long as you've had your Roth IRA open for 5 years, and you can start taking contributions out of that penalty free before you hit that age 59 and a half. So at least you can live off the contributions piece of that. So those are a little bit more complex. I wouldn't necessarily do it yourself and spend a lot of time on Google educating yourself. But those are the kind of options for somebody that's like 52 and saying, I want to retire now. What options do I have? So that's the bridge strategy. That's what I will talk about. And then one thing that I know Mike was going to hop in, if I forgot to talk about, is there is a healthcare impact to this. So if you retire before age 65, then certainly you're looking to have to pay for your own healthcare, which if you've ever been out under the employer umbrella for a while, when you start talking healthcare off the street, that's pretty expensive. So that's something you would have to factor into your equation. So, all right, Mike, anything I left out there?
No. I mean, it sounds like, there's some very key decisions you're making between 59 and a half and 70. Some key decisions you can't undo. So just, obviously talk to your advisor and work with, but be careful of these. So once you hit 70 and money's coming out and you're getting your Social Security, enjoy it.
Yeah,
but
there you go. Then you can sit back and avoid hacks, right, for the rest of your life. So, all right, guys, that's all we have for you today. Thanks so much for listening in. Have a great weekend, and we will see you guys back on Monday. Have a good one. Bye.